our indices, our bonds, represent about 1% of the bond indices. So somebody who's operating a fund that holds global bonds directly in proportion to their weightings in the indices would only have to hold 1% in Irish bonds. So really, at the end of the day, it's no big deal to the bond holder as to whether or not he holds Irish bonds. The point I would make is that the world doesn't owe us a living. It doesn't have to hold Irish bonds. So they're a sell. You have to sell them. And the credit rating story is poor. We're in BBB plus, as I said, which is a couple of notches above in sub-investment grade, otherwise known as junk grade. So the task has been to go and sell the story to investors rather than sitting in Treasury building.
And I could make a point that that's not really reflective of, and you've made this point previously, Mr. Corrigan, of the situation here in Ireland. What do you believe it will take that the credit rating agencies will, I know Fitch recently lifted us to stable status. What will it take, in your view, and feed into it in terms of the promissory note, and if you that it will take for Ireland to, for want of a term, come up the ladder chain in terms of the rating by the credit rating agency and improve, I suppose, assist in terms of putting Irish bonds into position that really is the correct reality in the ground in terms of the situation here in Ireland, the reality rather than the perception.
I don't want to be unduly critical of the credit rating agencies, but
I'd like to hear it. That's really what I want to try and get your honest view.
But it is a fact that they followed markets on the way down, and equally, in my humble opinion, they will follow markets on the way up. So they will revise their ratings when we get there, and by when we get there, I mean probably when we're out of the programme. What we have been doing in terms of our investor relations selling activities is, in the first instance, to focus on the bigger investment houses which don't rely slavishly on the credit rating agencies' rankings. There are major investment houses which have their own teams of credit analysts and who aren't constrained. And we have made considerable progress on that front, as evidenced by the recent issue.
Would you anticipate that our bond yields over the next 6 months, do you anticipate that our bond yields will continue in a downward trajectory?
Well, I think the issue just 2 points on that, Deputy. First of all, in absolute terms, German rates are at an historically low level, representing, as I said in my opening remarks, Germany's position as a safe haven in the current Eurozone uncertainty. In absolute terms, Ireland, despite its poor credit rating and despite the elevated spreads or difference between Irish yields and German yields, in absolute terms, we are borrowing at rates that we would have been challenged to borrow at in AAA times. So the question as regards the movement in rates is whether we will move down to meet the German rates, or whether the German rates, as things normalise, will move up to meet us.
My question really, Mr. Corrigan, the limited time I have, is that has been lost in the discussion. That it's about, in my view, it's about the absolute rate. The spread would be extremely important if German rates were reasonably high and ours were very high above. But German rates being at virtually zero rate is very, very low altogether. I don't think it has the same measure.
I agree with you. I agree with you completely. And for example, that is why, say, in relation to our Treasury bill programme, we are issuing very modest amounts because we feel they are floating rate in nature. We feel that it makes sense to lock as much as possible into fixed term rates at these levels, despite the elevated spreads, because in absolute terms they are relatively good value.
And my final question on the promissory note. Would you believe, in your opinion, in terms of the way the markets are reacting, that an outcome which would be involved will say the spreading of the repayment terms, maybe by way of a bullet payment at the end, over an extended period of time, which will say a reduction in interest rates? Because certainly when you look at our budgetary position at the moment, we're looking at of the order of 1.9 billion in terms of promissory note interest charge. It goes down slightly over the next 2 years, but you're talking about 5.5 billion over the next 3 years, making up about 20% of our interest charge alone. So do you believe that the markets, that's what they're factoring in, that combination of a large extended period, maybe with a bullet payment rather than a repayment term, over, we'll say a bullet payment at the end, and a reduction in interest is what the markets are factoring into at the moment, factoring into pricing?
Final reply to the Deputy
in the main, they're factoring in a reprofiling of the notes, which is to do with the rate of repayment. That is the main, which doesn't affect the debt to GDP ratio, but it certainly takes pressure off the budget.
Deputy Pierce Thornton.
I want to welcome our guests, Mr. Whelan, Mr. Corrigan, Mr. Murphy, to the committee, and just to delve straight into it. The Commission report in Ireland, the most recent European Commission report, which has appeared on the story.ie, states that, as you've informed the committee, that the Irish government are in negotiations in relation to OMT and other options to provide assistance to the state to access the markets into the future, and particularly in relation to outright monetary transactions. Can you just go into some detail as to how that would evolve for the state? What type of conditions would be imposed or potentially imposed if Ireland were to secure OMT, and how would that look? What would be the pros and the cons from your view in the NTMA of involving the state in terms on OMTs?
That's a difficult question to answer, Deputy, because the European Central Bank has not spelled out in precise detail, what the conditions are in order to qualify for OMT. So nobody has yet benefited directly from OMT. That having been said, I would make the point that we have benefited indirectly. The term of art I would use in talking to investors is that, for example, in the 5-year area, which is where we would have issued the bond at the very beneficial rate of 3.32%, we certainly benefited from the gravitational pull of OMT, the mere fact that it's there. But the terms under which it would be triggered for any particular country have not been spelled out.
I presume in the option paper that you have received, OMT is one of the options. Can you give the committee just some information?
No, the answer is no, it's not one of the options. What we're looking at in the context of the credit lines is what credit lines might be available jointly from the IMF and the ESM. The OMT is a matter for the European Central Bank and is a separate and distinct matter from what I was referring to when I spoke with reply.
And in that case, so there's a division there, because one is a credit line which is contingent. If you require it, it's there, it's in your back pocket.
Yeah,
if you require it, and the OMT would be a separate type of beast, if you want to call it that. In relation to how do you think that if Ireland were to secure the involvement of OMT, how do you believe that potential investors would see that? Would they see that as Ireland hasn't in fact exited the programme as was planned and they have required additional assistance? Would you see it as a positive or as a negative? And while the conditions haven't been spelled out, is there conditions that would be the potential conditions that would be worrying if they were to be imposed on the state?
Well, insofar as in very broad terms, the ECB has given an indication of what the conditions might be. My understanding is that insofar as the NTMA is concerned, those conditions relate to normal access to the markets. I mean, access to the OMT, if we were to be explicitly included in it, I would feel, on the balance, would be positive. In the same manner as access to any contingent lines that might be made available jointly by the IMF and the ESM.
You mentioned in response to Deputy Donald just what the investors out there are factoring in, and you mentioned it's an extension of maturities of the or an extension of payments of the promissory bond. Is that what all investors are expecting, or is there a proportion? Is that a proportion of investors? And in relation to the pillar banks, while you don't put as much weight on that, is there an expectation that a move will be made in relation to some of the money that we've invested into the pillar banks?
I mean, investors don't take us into their confidence to the extent that they actually show us their credit analysis. It's a very general discussion that will be had with them in relation to what their expectations are. We're the ones who are selling. They would see themselves as doing us a favour by seeing us in the first place. As I said, they don't owe Ireland a living. We're only a small proportion of the investable universe. But it would be our judgment that the investors who have bought Ireland have, to a greater or lesser extent, priced in something for the promissory notes. Some of them will have priced in something for an ESM deal on the banks, but in general, they would see that as slightly more longer term, because there's a lot more groundwork has to be done institutionally in order to get the ESM into that space.
Okay. In relation to, just moving on to a separate subject that's been mentioned earlier on, an issue I raised with the Minister of Finance last week, it's in relation to employees of your own organisation, the NTMA, who've moved into the private sector. 3 senior employees that were seconded by the NTMA, who worked within the Department of Finance, have been seconded, have left, have resigned their positions of the NTMA and have gone into the private sector. The latest one, obviously, has been Mr. Torby, and I think that, you know, not in anything about the individuals, but the fact that this is happening needs to, you know, ring alarm bells in all of our heads. The revolving door between Department of Finance and the banks was part of the reason, I believe, that we've ended up in this terrible situation that we're in. And the fact that somebody could head up the shareholding management unit of the Department of Finance, who was actually the head of that, and within 8 weeks become an executive in a bank that was subject to the policy decisions that he was making and discussing with his team, is just baffling. The fact that 2 other senior people in the NTMA have ended up in senior positions in other banks, like, I know you say that it's, you know, that it's an issue of concern, but does it ring alarm bells in the organisation that the cooling off period doesn't exist? If you were classed as public sector workers, there would be an automatic cooling off period, which the government believes should be 2 years. We're allowing senior people in the Department of Finance who work for the NTMA to walk into banks with an 8-week period. What do you believe needs to be done, and how urgently does it need to be done to stop this type of facility? Because I'm sure that while, and maybe another question just that adds on to that there, the NTMA Act prohibits people from discussing or divulging information that they would have secured or been informed of during their employment of the NTMA. Does that extend to those who have been seconded by other departments or agencies as well?
Well, first of all, the people in the NTMA are not civil servants. The NTMA Act specifically says that. Secondly, the Code of Conduct to which you referred applies to the civil service and doesn't apply to commercial or non-commercial state bodies. So the NTMA is not unusual, although I accept what you're saying. There may be particular sensitivities around the NTMA, but it's not unique to the NTMA. Certainly, it's something that we will look at, but we are not part of we are not part of the civil service.
And that's probably the problem. And the problem is that obviously the changes between the fact that your staff, the NTMA staff, has been seconded and is working in the most senior of positions in the Department of Finance, which is supposed to be putting the screw on the banks to ensure that they're acting appropriately because of the reckless behaviour that they've been involved in the last couple of weeks. And the banks are sitting back and saying, I'm going to have him, I'm going to have him, and I'm going to have her. And they're basically cherry-picking officials within the Department of Finance who has all of the information in terms of deleveraging. One of the officials who left your own organisation worked in relation to Anglo-Irish Bank, who has all of the information, the detail, the minutiae of what the government strategy is, where the government wants to put focus on, where the government wants to put the squeeze in these banks, and they know the information in relation to the competitors, these banks' competitors, and these banks are sitting back and cherry-picking them because they are seconded by the NTMA and therefore they are not public sector workers and don't fall within the same rules. And they're able to do that within 8 weeks. There's questions whether a 2-year period is sufficient, but allowing somebody with that type of information to walk into the executive room of a major bank, which is a private institution, within 8 weeks is just not acceptable. And I don't see, I'm alarmed that I don't see an alarming response coming from the NTMA that in fact, in my view, that this state has been compromised by the actions of, by potentially compromised by the fact that we don't have robust mechanisms to stop this revolving door situation taking place.
Well, I have already said that there's a need to look at this, but as I said, if there are rules in that respect to apply, they need to apply universally to all commercial and non-commercial state bodies. That's a matter of policy. That's not something that we're directly involved in. That having been said, insofar as NTMA employees are the subject of concern, and I understand the concern that's been expressed. I've already indicated to Deputy McGrath that I would certainly, my senior management team will be reviewing that. I honestly, Deputy, can't go any further than that.
Okay. Can I ask you when Mr. Torpey notified you of his termination of his contract?
Mr. Torpey submitted his resignation when he, in early January, when he came back from his holidays in Australia.
So that would be after the time where the unit where he manages sold €1 billion of assets, contingent liabilities that were held by the bank, which he now will walk into as an executive director in a number of weeks.
Well, he was out of the loop. The Minister for Finance has already answered questions on this in the Dáil. He was reporting to the Department of Finance. I certainly wasn't involved in it, but the Minister has said that he was out of the loop since the 14th of December, and that seems to be the appropriate date from which to date the question of whether he was or wasn't in the loop.
And you're satisfied that no work or discussions in relation to selling these assets by this €1 billion, the biggest sale of state assets last year only started or only begun after the 14th of December when Mr. Torpey went on holidays?
But I'm not involved.
Okay. On a final couple of questions, you mentioned these aren't public sectors. Has the NTMA have any discussion of adhering to the public sector pay cap that's been set by the government? There's 11 members of the NTMA, I understand, that earn over €250,000 per annum in salary. Is there any suggestion that you would actually adhere to public sector pay caps? And also, last year you paid out bonuses to 5 individuals, or 2011, sorry, to 5 individuals amounting to €62,000. Did you pay any bonuses, pay-related performance bonuses last year in 2012? And if so, what did they amount to? The last question is, and I would like, unfortunately we're struck for time, but can I ask you just in terms of State Street, who defrauded the NTMA of €3.2 billion, and I welcome the fact that you have recovered that amount of money. You said before committees of this House that there is unfinished business there. Does State Street still manage I think last year they managed 900 million euro of the state's money. Does State Street still manage that? What is the relationship going to be with State Street in the future, given the defrauding that took place?
Well, maybe, Deputy, to take the pay issue first. The background to the establishment of the NTMA was to set it up outside of the civil service so that it could recruit the skills and bring professionalism to the market-facing activities which the state necessarily has to be involved in. And it has operated on that basis since its inception in 1990. In recent years, mindful of the financial difficulties facing the state, and certainly we're acutely conscious of it. We're in the front line trying to sell debt in order to pay the bills on a day-to-day basis and meet the debt redemptions. There has been no general pay increase in the NTMA since 2009. The bonuses to which you referred are incentive payments which were paid earlier this year were in respect of 2011. I recall they were in an amount of roughly over 60,000 and they were paid to 5 individuals. There are over 500 people working in the NTMA across its activities. In relation to the banking unit, notwithstanding all that you've said, we have lost 5 of the 9 people who originally went over to the Department of Finance on secondment. And in relation to NAMA, which is competing with other enterprises, both state-owned and non-state-owned for staff, it has lost 34 people. So, I mean, the issue here is with respect to pay generally, and as I said, we have not had a general pay increase, and I'm not putting the poor mouth on it. It's right that we shouldn't have a pay increase, but the issue is really about the business model. Do we want the state to have the professionalism to operate successfully in the capital markets area and other areas where skills are required, or do we want to push dysfunction back into the civil service? That's the issue, and that's a policy issue. I think the agency has done a good job, continues to do a good job, and successive governments have placed new demanding functions in the NTMA, some of which I referred to in my opening remarks. The senior management group and those earning over 200,000 took a 15% pay reduction last year. Again, I'm just taking it as a fact. I'm not looking for sympathy or congratulations. That's only right that we do that. And I am polling the staff members at the moment in order to renew the gifting procedures with the revenue for the current year, and I would be hopeful that they would continue to do that. But the question of pay is related to skills, is related to outputs, and the generalists in the civil service will not be able to do many of the tasks that are entrusted to the NTMA.
The specific question was about the 2012. Will there be bonuses paid for 2012? Because you answered the question, the point about.
Yeah. With respect to you, Deputy, if you have questions, I'd ask you to prioritise them. If this is an important question for you, it needs to be at the beginning of your sequence.
No, I just want the answer.
Otherwise, you'll be abusing the chair at the time. So very briefly, Ms. Corrigan, and then moving on to Deputy Humphreys.
The pay for 2012, there will be no general piece for pay increase for 2012. The question of bonuses, we have to look at that yet. It hasn't come out.
Chair, very much welcome. First of all, can I kind of recognise the work that the NTMA has done over recent months in getting back into the market and raising billions at competitive rates. It was a difficult job, but I think it was a job done well. And I also recognise that. Can I ask you just in the beginning? I've certain areas that I have an interest with, and I've been trying to get information and intelligence basically on it. But would the NTMA monitor the sale of Irish bonds on the market? with that, but would be part of the role that you yourselves would look at is to try and get the idea of what value when they're being traded on the secondary market.
Yes, there's a reasonably high degree of transparency around the secondary market. The various trading systems and electronic reporting systems such as Bloomberg and Reuters carry prices on their screens. Those prices would reflect the amounts, the prices at which, in the scheme of things, relatively small amounts would change hands. So they would typically reflect the price of a transaction of the order of 1 or 5 million euro.
Possibly ask you, the ECB used the security marketing programme there for purchasing, I think, approximately about 20 billion euros there in 2010 and 2011. Would you have information based on the purchase of those bonds at that period? Would we be looking at a profit margin in and about these for the ECB of 3 to 5 billion on maturity on Irish bonds? Now, I do know they were bought over a period of time, but would I be too far? Because I've used this figure several times. Nobody has contradicted me, but nobody will actually confirm that that is the margin that the ECB will get through the security marketing programme on the bonds that were purchased by them between 2010 and 2011. Would you have that data and intelligence, or would you agree with me that's approximately right?
We don't have the information because all we see on the screens are the prices at which the paper is being traded. The screen-based system doesn't report who the buyers and sellers are. However, that having been said, to use the term of art which we used earlier, it's likely that the profit, so to speak, made by the central bank is probably in billions rather than millions. But I don't have a figure. I don't have a figure for it. We are not privy to the precise holdings of the European Central Bank, nor do we know when they bought, precisely when they bought, and at what price they bought it. But we would have a general idea of when they were in the market and a general idea of what the prices were then prevailing. But I don't have the profit figure.
I'm not trying to put you in an awkward position.
I'm trying to answer the question as openly as I can.
And I take it, but based on, roughly, I would say is I'm not. You wouldn't say I'm too far off that there would be a possible profit margin based on the trading prices in 2011 when they were in the market. I think the ECB has pretty much confirmed to be either 19 billion or 20 billion, so the figure wouldn't be too far off the figure I'm using of approximately just under 5 billion.
The figure is in the billions rather than the millions. I read the governor's evidence, and I saw that he didn't demur when you mentioned a figure of 19. Again, we would only be guessing ourselves because we don't. Central banks are notoriously secret, even with agencies like ourselves. So it is in billions rather than millions, which I'm not disputing that.
And like, considering kind of, we'll agree that it would be a good tactic then to look at, that possibly that money could be, those bonds could be sold back at face value, and it would be a mechanism of reducing, our borrowings if we got it at the face value that the ECB got us. And I know you probably don't want to comment on that, but it would be a good tactic to go after that, just under 5 billion, and it would make a significant difference in our debt. Yeah. Good. Just coming back to the earlier evidence from Deputy McGrath, was the figure that you used in December? We had about 90. We're holding about 19 billion in
19
cash.
billion is roughly what I said.
And then we're looking at going into the market of about 7 for a further 7. You've already 2.5. Going to raise another 7.5. Am I picking it up right that your intention is to try and hold approximately a year's cost of funding in advance?
Well, what I said was that we were targeting raising 10 billion this year. which other things being equal would give us a year's funding going into 2014. I did say that that figure of 10 billion could be a movable feast, so to speak, depending, for example, on what contingent credit lines were available. There could be scope for reducing that, but that is the working plan. We have to have a figure, and people ask us what the figure is, and that's the figure. But it could be it could be less than that. But I wouldn't see us in the scheme of things at any point in time holding materially more than 20 billion or 19 billion in cash, which is what we came into at the beginning of the year.
And you would kind of be looking at holding approximately the 20 billion, provided you get the credit lines accessibility, holding approximately 19 to 20 billion.
Well, it could be
on a rolling basis.
What I said is it could be less than the 20 billion, depending upon the quality of the credit lines. But again, for the purposes of discussion, yes, yeah. Yes, indeed.
And just how much? And I know there would be various rates that you will be holding that 20 billion. How much is it costing us to hold that 20 billion for a year's funding in advance in interest? Now, I do accept it wouldn't be an exact figure you give me, because obviously there's numerous different rates at different periods you borrow the money, but approximately how much is it costing us to hold that 20 billion in advance?
Well, it's not it's not a question of holding it or not holding it. We have to hold it. For example, if we didn't pre-fund the funding cliff in 2014, I can say with a reasonable degree of certainty that yields would not be as low as they are today. So there's a trade-off between holding substantial amounts of cash and prudent debt management. My colleague Oliver Whelan and I sit down once a year with other debt managers from around the world, and it is a fact that in normal times, some smaller countries who would have quite a strong credit rating hold up to 18 months in cash. So these cash balances are not unusual, and would be regarded as a matter of prudent management to have sufficient cash at your back. The world, particularly at the current time, is a very uncertain place. And as I prefaced in my remarks, markets don't go in a straight line. We're in a particular sweet spot at the moment, as reflected in the earlier discussion on the absolute level of yields. So it behoves us to hold those levels of balances. Some of those are held in the central bank and some is out in the market, but we have to look at the counterparty credit risk in putting money out in the market. There are very few, if any, banks today which have AAA ratings, and I don't think this committee or the Public Accounts Committee would thank us if the balances were to go up in smoke because of the risk taken on some credit counterparty in order to gain an extra few bob on the interest rate. So it's something that we have to do.
I know, yes, I understand that, but that was not the question I asked you. I asked you how much does it cost to hold that 20 billion on a rolling basis, taken into consideration, just a rough figure. I know all those considerations have to be taken into consideration, but I'm just asking how much is it costing? The average yield,
Well, I'd have to come back, Chair, on that, because it's not a simple calculation, and I know you've asked parliamentary questions, or parliamentary questions have been asked on this of the Minister for Finance, and I mean there are other monies flowing through the bank account as well as our borrowings. There's all the state's tax revenues and so on and so forth. It's all fungible. To try and distinguish how much is due to borrowing and how much is due to how much represents the tax revenues of the state. But if the Chair would give me a chance, I will make a stab at answering the question and come back to the committee.
I would think this would be one of kind of a key question when you're doing your risk analysis. I'm surprised that you wouldn't have. I accept everything you say before, but when you sat down with Mr. Whelan on the year and you looked at it and assessed it, surely that figure would have been there at that stage.
Well, you have to look at the absolute risk.
Well, look, I want to move on to something else, so I'll accept you to come back and give me that that figure. Again, going back to Deputy McGrath's, and we were talking about the minister said, like, with a possible deal, and that it would be in billions instead of millions. Was I and that you would agree with the minister on that?
Yeah, well, absolutely, yes.
Yeah, yes. And you would have taken into consideration your knowns and unknowns to come up with the kind of theory that the savings would be in the billions rather than the millions. So you would have the knowns and unknowns when you were coming up with the paper for the minister.
Well, it's a bit of a stab in the dark, as I said. It depends on the absolute amount of funds that are covered by this, obviously, and we've made an assumption on that. It would depend on how long the maturity is extended for, and again, for the purposes of arriving at the figure of billions, we assume that it will be extended for 10 years, and it depends on the difference in the interest rate at which they would be extended compared with the interest rate that we would have had to pay if we went out onto the market. So I think they are the main three constituents that go into the calculation.
Okay. To come up with, well, it's still the same question. To come up with the assumption that it would be in the billions, you speculate that it would be greater than 10 years.
I'm saying that for the purpose of the illustration, we assumed it would be 10 years.
It would be 10 years. Yeah. And for the purpose of the illustration is then, what would be the rate?
Well, we assumed that the rate would be less than the rate at which we can borrow, but for the reasons already stated, I'm not prepared to speculate publicly on the rate at which we might borrow, because I think that speculation would be unhelpful to our borrowing operations on the market. I can't say what I would expect to pay for 10-year paper.
Yeah, but
and that's an important component of the calculation.
Yeah, I always worry. I had a primary school teacher that always used to say to me to assume it makes an ass of you and me, and that's why I'm just trying to get down. But like as a practicing politician, and if we're talking, say, is the negotiations we're going in, but I'm going to say billions. I'm trying to dig down.
But as soon as I assume publicly, the market will say that's the rate at which we expect to borrow, and that is not a wise speculation for us to do. I'm sorry, Deputy. There are certain issues here which are commercially unwise to speculate on, because I'm given hostages to fortune.
Okay, I do it, but like you can see why most people here are trying to dig down to get stats.
I've given you the three components of the calculation. Yeah. I haven't actually put numbers on them all, and I'd have to ask you to respect the commercial sensitivity around that.
And obviously, if the year change, if the length of the 10 years,
if it were 15 years, it would even be better still. If it were to move from 10 to 15, if it were moved from 10 to a shorter period, obviously that wouldn't.
Chair, am I getting less than the 12 minutes when you're pulling me up? Because I'm just
minutes now.
I'll
bring you back in again, Deputy Humphreys, if we can move on.
I just wanted to say, look, thank you. I don't particularly try to be awkward, but I think it's to try and actually get the figures to understand the information you're giving us. When you give the hard figures, you have a better chance of understanding. It's very difficult in anywhere you go within this for anybody, and I really find it kind of unbelievable, and this is not disrespect to you because I've asked many areas in this, that we can't get an accurate figure on the billions or the bonds that were purchased through the security marketing program. I just find this, absolutely, nobody would disagree with the figures I put out there. I cannot get nobody to confirm them either.
Thank you, Deputy. Deputy Richard Boyd Barrett.
Chair, and thanks to the NTMA for coming along to the committee. As we speak, the headlines are already appearing that the NTMA are saying we're going back to the bond markets. Now, frankly, I just think that's symptomatic of the superficiality of a lot of the media coverage of this crisis that we're in, this debt crisis that we're in, and because it's assumed in that that's a great thing. And it should be our high aspiration and cause for celebration that we get back to the private debt markets. Can I, in an attempt to burst that bubble, put it to you that that's not really a wonderful aspiration for the state, that we would be far better if we didn't have to borrow to the huge extent we have to. And the reason we have difficulty in borrowing at all is precisely because of the huge level of debt we have. In other words, the bigger the debt you have, the more difficult it is to convince anybody to buy that debt. And that the problem is that we have this enormous debt. And I don't really see that anybody has any reason to slap themselves on the back about how we're managing this, because as far as I can see, we're managing a debt that isn't ours, and we're putting ourselves into a completely unsustainable situation where we are prey to the whim of these financial markets. And I just want to ask you the question, because that's the way I see it. And, you know, it's not just the way I see it, but even the EU Commission said if growth doesn't materialise, if unemployment continues to stay high, our debt is likely to be unsustainable. So isn't there a better option from the point of view of managing our debt? And isn't that option to repudiate the debt and say, sorry, it's not our debt, we're not paying it? And you pointed to the fact that the key balance is the primary balance. And could you confirm that actually our primary balance situation is not disastrous? Our primary balance, if you exclude the debt interest we are going to pay back next year, which is I think 9.1 billion euro in interest, that our primary balance is actually manageable. But that our problem is we're borrowing to pay back the borrowers, or to pay back the lenders, should I say. That's our problem, and that's the problem we need to deal with. And we're sinking ourselves in a hole by trying to continue to pay back this utterly unsustainable debt.
Well, certainly the debt, which is projected to max at 121% of GDP, as I mentioned in my opening remarks, that is a very big debt burden. And the fact that it is so big clearly causes problems in accessing the capital markets or in borrowing, and clearly affects the spread, the difference between Irish rates and German rates. The view of the Troika is that it is sustainable based on certain assumptions. Sustainability, of course, means that it will peak in the foreseeable future at a known, in inverted commas, date, which is this year, and will decline thereafter.
Sure, I know that's it's their hope rather than it's their hope, and they also indicate downside risks. Yes. Okay, but I'm not really asking. I know what the Troika think, and I know what the Troika hope, but I'm asking you what you think. Wouldn't it be a better option for us at this stage not to pay 9.1 billion in interest and just deal with our primary deficit, which is 6 billion? Wouldn't that put us in a far better position to say, sorry fellas, we're not paying this. Our economy is being beggared. Our citizens are being devastated with this stuff. We need that money to invest in jobs and growth. And if we said that to them, we could actually manage a primary deficit of 6 billion. Wouldn't that be a better management of our situation?
Well, I think, Deputy, what you're talking about is defaulting on the debt.
That's exactly
clearly.
what I'm talking
well, certainly.
On somebody's debt, not our debt.
Well, on the debt that Ireland, as a country, has contracted for, and it's certainly that's not something that, given my position, I could countenance. I mean, that's a matter for the politicians to debate. But I mean, if you look around at countries which have defaulted on their debt, they haven't ended up in particularly happy places.
But can I see? I mean, I want to ask you about the relationship between you and the government as well. I mean, I don't want to personalise this, right? But you're paid twice as much as the Taoiseach. And there's 47 people in the NTMA who are earning over 150,000. In other words, more than most of the ministers are earning. And I just wonder about the nature of the relationship here. Who's telling who? Who's advising who what to do and how to manage this situation? And I look at the various companies that the NTMA have enlisted to run the SME funds. I know previously you took advice from Rothschilds. I'd be interested to know, are you still getting advice on the management of our debt crisis from Rothschilds, who are bondholders, the Carlyle Group, who are managing the SME fund? These are global asset managers. Are they advising you? Is that the circles in which you move? Because quite obviously, these people would think it would be unthinkable that we would repudiate the debt because they'd take the hit. But our responsibility is to the citizens of this country. And, I mean, it strikes me, and it's very obvious if you look at what's happening at the moment, the bond markets are happy with Ireland because the government or the NTMA or both are saying to the bond markets, we are going to pay you back every penny, and we will enforce whatever level of austerity and cuts on the citizens of Ireland that are necessary to pay you back. And the bond markets are going, yippee, we'll buy Irish bonds, because these guys will do anything to give us our money, to make us our profits, no matter what cost it is to the Irish citizenry.
Well, I mean, to answer your question on the relationship between the NTMA and the government, the NTMA is an agent of the Minister for Finance. We report to the Minister for Finance. I report directly to the Minister for Finance. Government makes policy. We provide certain input into that in the limited area of debt management, and we execute government policy. We're not policy makers, as I referred to earlier. In the main, we are policy takers.
You are the experts. Do you not advise the government on how to deal with these matters?
We advise the government on fundraising and debt management, but that's predicated on the going concern concept, i.e. that we're not going to default on our debt.
Okay, you didn't answer my question. I haven't got much time because I have one other question I really want to ask you, but you might in your comeback also just ask me, answer the question about Rothschilds and other consultants and asset management companies that you might be paying or enlisting for advice, support or assistance in the management of our debt and funds and so on. But the question I want to ask is, you have responsibility for Coillte, which there's negotiations, I understand, ongoing for the sale of the harvesting rights of Coillte. Now I want to ask, I'm utterly opposed to the sale of Coillte. I think we're selling an asset that could actually generate revenue for the state and create employment. But what do you say to the charge that the valuation by New Era of the harvesting rights is, I understand, about 600 million, is the valuation that you've given, which works out about €500 per acre for the 1.2 million acres that are under Coillte control. The Woodland League and others concerned with forestry say this is a gross undervaluation of our state forestry. This is a giveaway of one of our most important natural resources. Could you respond to that and to the assertion I would make and others would make that it makes no financial sense to give away the harvesting rights to forestry when, if managed and invested in properly, they could actually generate much more revenue and much more employment for the state if they were retained under public ownership?
Well, the New Era unit within the NTMA is providing advice to Creelta, or to the Department of Agriculture, among other government departments, on the possible sale of state assets, and the sale of the harvesting rights in Creelta is one of those projects that is under consideration on foot for government decision. Frankly, I didn't come prepared today. I don't have the figures. I don't know if they are in the public domain. But these are policy decisions, again, coming back to my earlier comment, which are made by the government, and we either execute on them or advise on them. We don't wake up in the morning and decide to sell the harvesting rights of Creelta. That was a decision that in principle was taken by government, and the advisors in New Era are helping the Department of Agriculture in working through that project to see whether it is worthwhile in executing on.
But can I? Well, first of all,
with the chairman's agreement, again, in the interest of trying to be open with the committee, I will happily come back in writing on the valuation question, because I have lots of numbers and figures in my head, Deputy, but there's a limit to what I can carry on.
No, that's fair enough. That's absolutely fair enough. Just 1 minute yet. But could I ask you to do that? Because even as somebody who doesn't know that much about land valuation, €500 per acre is the allegation that New Era has valued our forestry at. Even I can work out that is a gross undervaluation, particularly as I understand there was a widespread geological survey done, which we haven't seen the results of what's under those forests, which could mean that the land is much more valuable, or some of the land is much more valuable. But can I just lastly ask you in that regard, is it not your responsibility, well, I take it it's a policy matter as well, is it not your responsibility to furnish us with the economics and the finances of this, and advise the government as to whether this is good value, whether, because New Era is dealing with state assets generally, and you're involved in the management of state assets, that actually we could do it differently, and we could generate more revenue and more employment for the state if we did things differently, or they kept them under public ownership. In other words, you should set out what the options are from the standpoint of, if you like, the best value for the state, and I would appeal to you to do that, because I certainly believe there's a case that this is crazy from the point of view of good value for the state, good management of our resources which are under your remit.
Deputy Barrett, that's the last comment. Do you final reply, Mr. Corrigan?
I will write to you, Chairman, in the matters that and I apologise to the Deputy that I don't have the numbers at my fingertips, but I will come back.
Thank you very much. Now I'll call on Deputy Peter Matthews, and I'll afford you to take 12 minutes because
I know you generously gave your colleague 16% extra, but that's your prerogative.
I'm giving everyone 12 minutes, Deputy.
No, 14.
Yes.
You said it yourself.
And some at 16 and some at 18.
Chair, you're the boss.
Yeah. Well, thank you very much.
Thanks, gentlemen, for coming in. Do you mind if I don't want to, can I preface my questions by saying I'd really appreciate if you could just answer very quickly, or say pass, fingers on buzzers, because I want to ask a lot of stuff. First of all, and this goes to all three, and you can all answer it, have you all read Carmen Reinhardt's books on debt? Yes? No? Yes? No?
I've dipped into it. I haven't read another book.
Have any of you read John Malden's thing on the debt supercycle?
No.
Okay, that's telling. I think I'd recommend them, because I also want to know, did you know that Herman Van Rompuy, President of the EU Commission, is somebody who wasn't aware in May 2011 that the provenance of the banking liabilities of our 6 little old banks to the extent of about 75 billion related to funding the repayment of bond investors, in spite of the fact that there was at least 75 billion of losses, insolvency in those 6 banks. Were you aware of that? Because I spoke to him and he wasn't aware of it himself. And he said, is there a paper on this? And I said, Herman, if you're listening to the minority analysis and facts, you'd know about this, but he didn't. So that was a bad starting point, that in May, when he was visiting the Taoiseach in May 2011, he wasn't aware that the odious provenance of the liabilities to the Central Bank of Ireland and the ECB, to the extent of at least 75 billion, had their origins in losses, and that equated to nearly 50% of the national income of a country with 4.5 million people. This is the essence. This is the core of the whole thing. So we're now. It's good to see. Do you agree also that we were strong-armed into being loaded with this bank debt by the financial establishment that Richard Boyd Barrett referred to? And I'll trip on to the next question. The advisors and the issuers, the people who help you with the issue of government debt, we know that it includes State Street, which have, foot-faulted in several respects and not had their proudest moment in terms of proper standards and ethics. Goldman Sachs, do they still advise you?
Well, we have no advisory contract with Goldman Sachs, certainly in
the last 2 years. Did they do any work?
They probably did.
Rothschilds did. Barclays did.
Well, Barclays led them, would have been part of the lead management team on the 2.5 billion issue, which
BlackRock Consulting. Sorry to rush the blindness.
BlackRock Investment Managers.
Oliver Wyman.
No, just let me. BlackRock Investment Managers, which are part of the BlackRock family, are substantial holders of Irish paper on behalf of clients. We've never employed BlackRock Consulting.
Okay. Well, they were part
Oliver
of the
Wyman,
PCAR exercise.
we have not employed Oliver Wyman.
Merrill Lynch. Yes, they did. They did the bank guarantee.
Merrill Lynch did years ago some work on the banking at the early stages of the crisis.
And when they were engaged, they were already in a state of rescue by Bank of America, and they never admitted that on the papers of introduction and in the appendices to their advices to the minister and to the NTMA. Yeah. So this is the sort of establishment that doesn't inspire confidence. And when we talk about confidence and getting people to say confidence is improving and all the rest, it wears thin with me. In the last 2 weeks, 2 weeks ago, there was the bond issues, and they were successful. Across the board in financial markets, there's a race to the bottom, to zero in bond yields. The VIX index, which you'll be familiar with, the VIX index showed a fortnight ago that it was at its least risky presentation ever since 1991. And then the other one, that CNN's Fear and Greed Index, was at the highest. So the markets at the moment are actually piling, wherever there's cash, they're piling in to reduce yields. And that's the truth of how we got our money, our bonds away at such prices. And I think we need to be honest about this. Because if we're not honest about this, we're going to actually let ourselves down in the negotiations, which are running out of time and road up to the 31st of March. And I'd agree with Richard Boyd Barrett that because the promissory note, which is a contrived instrument, financial instrument, to validate the loans to our banks by the Central Bank of Ireland and the ECB under exceptional liquidity assistance, they couldn't and wouldn't have been advanced, only that the government was strong-armed into creating the promissory note. That's another thing the public don't understand. The public thinks the pro note is a liability. It's not. It's a financial asset that actually becomes a liability according as it's turned into cash to redeem ELA. To IBRC. And in the case of the ECB, they've lent money to the survivor banks, which is tantamount to capital insofar as it's plugging all the funding requirements of the banks and isn't getting the return it should because it's a contrived low-cost base money. And the bank's asset generation and profit generation capabilities are absolutely in bits because of the rotten loans they created, the ones that they're still trying to collect. And there's a funding. There's a funding problem as regards, the mortgage problem that is now becoming to be acknowledged And Governor Honan the other day said, well, there's all sorts of interrelationships here. The banks can't actually, there are difficulties in dealing with restructuring the household loans and the SME loans, the legacy loans from the bursting of the bubble. They're incapable of being repaid by the borrowers. So the banks are going to need more capital. And the severe stress test quote on page 3 of the document weren't nearly severe enough. So we have a problem unless we start telling, we'll have a problem. It's like going after the boil has burst and it has to be cleaned up in a year's time. If we don't tell our colleagues in Europe now, today, with huge emphasis, that the scale is actually bigger than it was. And they won't like hearing this, because they think that they are actually carrying the load. They're not. They're lending to us. There's no free gifts in this. And they're lending to us loans that they shouldn't have been lending to us, that, like Iceland, the investors should have taken a bath.